Welcome back to the Investor Professor Podcast. This is Dr. Ryan Peckham, and this is episode 171. On today's episode, Cameron joins me. We're going to discuss company earnings. We're going to discuss the jobs report that spooked the markets today. This is August 1st. We'll discuss the market, company earnings. Many of the Mag 7 stocks reported this past week. We have right in the middle of earnings season. It continues next week. We'll talk about strategies. We'll talk about a little bit of politics and kind of what's been happening with the market over the summer. So as always, get your mind right and let's get to work. Well, welcome back to the show, everybody. Cameron, welcome back. We got new lighting. I said people don't want to see us in 9K. I said they don't.
I can't tell if I'm getting interrogated right now or if it's a podcast.
I don't think we did it right either. So we're learning on the fly.
We're making progress.
We're learning on the fly, man. Cameron shows up, something else is painted. We're working on things. So you excited? So we got everything ordered for the new studio. And it's lighting stuff's coming in. We're setting it up. We don't have degrees in this. No. I don't know how. This is 3-minute YouTube video work, just like exactly everybody on Normal America, man. 3-minute YouTube video work.
I'm excited about the studio though. You went a little Picasso in there with your navy blue, so I think it's gonna look good.
It should look pretty good. So, the markets. We're having. We always say that August and September usually not very good for the markets, and here, August 1st, and
yeah.
Market takes. It's actually the worst week for the market since Trump did the Liberation Day.
Are you worried about it though?
No, but I do think the market needs a little digestion here.
I agree with that. We've had a great couple of weeks.
I'm just worried that, we've had such a great, as we sit here for the year, we just went over these numbers, but S&P 500 is up 5.77% for the year. NASDAQ is up 6.82% for the year, and the Dow Jones is barely at 2.45.
Gosh.
So it's not like we've had a great year, but when you lose as much money as we did at the beginning of the year and then you make it back, who knew making your money back could feel so good?
Mm-hmm. Yeah, I got 2 calls today, but they were, seeing everything in the red and wondering, is this going to be the major sell-off? Is this going to be it? And it's like...
Well, we already had
I would be
one.
more worried if we didn't have a day. I understand.
Yeah.
Today was a little painful. I totally get it. But I'd be a little more worried if we didn't have a day like today.
Well, especially we'll talk about IPOs here in a little bit. But you look at Figma. That's not, so we'll see on that. But you just can't go straight up. And it feels like at the beginning of the year, we went straight down. And then now we've been straight up. And I just hope oh man, I just think about how we have just so many ups and downs, the volatility, and not just a little time to just have the market trade sideways for a little bit.
We've had a great market. I'm looking at these sectors. Very rarely, I think, do you ever take the opportunity, you probably do, but to look at it by sector, where the market's at.
And it's industrials and tech.
Okay. All right. Well.
Is that what you're getting? Sorry.
You told the story. I was getting
all right, go
into
for it.
No, but first thing is you look at tech because you're like, okay, it's going to be good. Tech's great, almost 11% year to date. Industrials, you want to take a guess?
15,
14.5, pretty good.
Yeah.
So it's just like, wow, my gosh.
And
year to date, we're not even done.
And what do those 2 sectors represent? What big theme do they represent?
Chips,
Chips and
data centers.
Data centers and AI build out.
Yeah.
That's exactly what that is. And which sectors have doing poorly?
We're going to be in real estate.
Yeah.
That's going to be one of them. I think consumer discretionary. Yeah. Consumer discretionary.
And
energy,
which has been not great this year.
Just because,
And then I'm sure
healthcare.
I was going to say Bristol Myers, Pfizer, United Healthcare, all in the toilet.
Yeah.
Those have not been good sectors at all.
Yeah.
And that's pretty much the year. It's the haves and the have-nots.
And there's there's a decent spread though. I'm looking real estate, materials, communications. There's a good spread. It's not you're either really good or you're really bad. It's there's some good stuff in the middle too.
Yeah, I mean, it has been a very interesting year from that standpoint. I mean, I'm just amazed though. Like Microsoft had really good numbers 2 days ago.
Yeah.
The stock ran up to, I think it was like 570. Let me see.
We had a great earnings.
They did, yeah. They had great earnings.
Just earnings in general.
Yeah, I mean, so far
A lot going on.
Right. I mean, the highest I can see it is like 543, but I know after hours it got into the high 550s.
Yeah.
And then now it's at 524. When they reported their earnings, it was around 513 a share. If the market brings Microsoft back under 513 a share, and you can basically get that quarter below the cost that they were when they reported the quarter of how good those numbers were.
Yeah.
I mean, that's what you have to be looking for if the market comes back down.
Isn't there like a skew to Microsoft's earnings with OpenAI? Because don't they own part of it?
They do, but it's only like 10%. I mean,
yeah,
it's not.
I wonder how much that impacts it.
I mean, really, it was just the cloud business, the Azure, you know?
Yeah. Well, so their business is based on usage.
Yeah.
That's a good bit. So it's funny because like we were all like tech was all about SaaS, software as a service, and it's, licenses.
Yeah.
Now all these companies are doing it, hey, based off usage, which it can be good.
Yeah.
But also in times like this where people are using a lot.
And you actually going back to like sectors that haven't done well. I mean, like software as a service companies haven't performed very well this year.
Why?
I don't know. You know more about this.
We talked about it last time. People aren't. But I will say they are slowly starting to change.
Yeah.
I think I'm seeing something now.
Right.
Previously, people weren't spending money.
Yeah.
And that's just the way it was. That's fine.
Oh, yeah. Tariffs and stuff. Well, that's
but also it's just like the cost of capital. Like anytime they was like, no matter how good the justification is for them for this ServiceNow contract they want to do, they want to buy all this ServiceNow stuff. It's going to be tough because the board has to approve it, right? And if the board's saying, hey, rates are here, that means your cost of capital, like our hurdle rate, what this needs to do for our business in order for us to say yes, is so high. It's hard to sell people that have such a high expectation. The board is what I'm saying.
Yeah.
So
it's just such an interesting time, man. Like, so the other big news this week is that the Fed didn't lower rates.
Yeah.
And Trump's pretty mad about that.
What did he say today?
He said that Powell needs to go out to pasture. Is that right?
Take him out to pasture.
Take him out to pasture. But then, so the jobs number came out, and that wasn't good. And that was the other reason that the market fell today.
And what do we do with that? What happened after that?
Okay, so the expectations were that we'd add 100,000 jobs. We added like 73,000. But the revision is what was really bad of last month, is them revising the job number down. And Trump fires the guy who... What was the job? I don't even know what the job title was. The guy.
I wonder what that conversation's like. Cause what was that show?
I think Trump just wanted to fire somebody. I mean, he just itching, he can't get Powell. He's like, who's the next
person? For a nail.
Like, it's the person who does the data.
You're fired.
You're done.
You're fired.
You're fired.
Just like that show that he had. What was it called?
The Apprentice.
Yeah. You're fired.
Yeah.
He's a little too comfortable with that. But
yeah.
No, I mean, to your point though, the revision was pretty rough.
Yeah, right? The revisions are rough. I mean, and
it just so happened he was the line of sight for Trump to pull the trigger.
Yeah, I think there's that. I mean, I think now with the jobs numbers, it's interesting that they had the meeting and then the jobs number comes out.
Yeah.
So now everybody's going to be, when you watch the news, when you look at the talking heads discussing things, they're going to be talking about if that jobs number would have came out before the Fed met, would they have?
Yeah.
Would they have cut? They don't have a meeting in August. They do Jackson Hole, which is where they'll be talking a lot. And so you'll get some clarity there. But if they drop it 25 basis points, I mean, it just doesn't, I guess maybe it's, the signal of it as much. But I mean, if the jobs keep falling, if the unemployment rate keeps going up, they'll end up cutting rates.
Yeah, we'll see.
But and then of course the whole tariff thing, and Trump put in a bunch of tariffs today. He didn't extend the deadline for a bunch of countries, so we'll see how that goes. And then next week, big on Monday, Palantir reports on Monday.
Yep.
And so does Mercado Libre.
Palantir got some big contracts recently.
Did you see that?
Yep.
How much was it?
I saw a few. There was 3 that I saw. One of them I think was it $3 billion, something like that. I don't know the term on it. It had to be over a few years. And then the other 2, I don't know. One was much smaller, but one was huge. What was it?
10 billion.
10 billion. That's what it was.
Say it again. 10 billion.
10 billion. Yeah.
10 billion with the U.S. Army.
Yeah, that's insane. Yeah, Palantir, you can't beat it.
I mean, we'll see.
And that's gold. That is the thing about these government contracts.
Yeah.
They are sticky. I bet you that $10 billion, I don't know if they released this. I didn't see it. But when you do public sector contracts like that, U.S. Army does not do a 1, 2, or 3 year contract like every other software company. We're doing 5, 6, 7, 10-year contracts.
Yeah.
And you think they're going to not pay on time?
No, I mean,
have an issue with paying
that's the thing.
That's gold.
Well, and Palantir, I mean, they also got, they got special approval to get certain government level, which is extremely hard to get. There's only so many companies around that can do that, and so, it'll be interesting to see. Like, I mean, obviously, there's a lot of people in the stock and all that kind of stuff. What happens to it? But if you're willing to hold it for a while, I think that's going to be just incredible.
If you look, I know there's probably a skew to this, but remember when the Doge thing was going on? I mean, it still kind of is to a degree, but when it was in its hype, and they were calling out ServiceNow, they were calling out Adobe, and they called that a third company of like, we overspent, like licenses aren't being used, whatever. Adobe, I think, cut their pricing on that by like 30 or 40%. I think ServiceNow did more.
Yeah.
I think that shows you like $1 from the public sector, the government, to a company is like, that's like $1.50 versus $1 that they get from other software
Somebody
companies.
else. Yeah.
They're willing to take a 30% cut because they know that dollar is dependable, and there's no way they're going to come in trying to like, change the contract. They don't move that quick.
Right. Well, and the ServiceNow is another one. They had great earnings.
Yeah.
And they popped to like 1,020 after their earnings. And then today they're like 914, 915.
Yeah.
So I do think that like if you're paying attention, you look at some of these, I mean, companies that you wanted to get into, I mean, August, September, if things move back down, I mean, you have to take advantage of the opportunities. I mean, it's kind of what we always talk about. You got to take advantage of the opportunities.
Do you want to talk about Meta? Meta's
Sure.
earnings?
Go for it.
They crushed it.
They did.
Yeah, he's definitely, I mean, they talk about CapEx and that was a big deal, right? Because of all this infrastructure and then also the super intelligence group that he's building out. Some of these pay packages are pretty ridiculous. Here's the thing that I think was interesting about that. When all this came out, so just quick rundown. Meta started this, Mark Zuckerberg's leading this team called the Super Intelligence Group, right? And it's basically like their AI strategy deal. So they acquired, was it Scale AI?
Yes.
Okay, they didn't acquire them. They bought 49% of them.
Right.
49%.
Oh, yeah, because they knew it wouldn't get approved.
Correct.
Smart. Under the old
already
administration.
Good look. Or I already like how this movie's going.
Yeah.
I'm going through it, right? So they acquire all that talent, and then they start acquiring other talent, and they're making these crazy offers where there was an engineer or a designer from Apple that got an offer that was either at the same level or higher than Tim Cook's pay package.
Yeah.
So that's kind of scary. That's a lot of money. But when those offers were flowing, not a lot of people were moving. And the CEOs like Tim Cook and then OpenAI, Sam Altman.
Sam Altman, yeah.
They're like, they're getting questioned on it because the news is starting to come out. Nobody's moved yet. Oh, I hear they're trying to poach, but none of our people are going to leave. Oh my gosh. They've taken every week. It's been like 4 or 5 people.
Yeah.
OpenAI, people are leaving. Apple, people are leaving. Ton of places, people are leaving. And it's kind of like, it's raising a lot of attention for Meta. Meta's really placing a bet. They really are. And it's going to be a question on, is that bet going to return for them or is it not?
I just think it's, everybody's like, I can't believe they're going to pay people that much. I mean, they're getting.
It is a talent. It's a war on talent.
But they're getting like the LeBron James of, computer science or whatever. I don't understand. Like, not everybody in roles should be paid the same. But so many companies do that,
And the numbers are a little inflated because it's over a set period of time.
Right.
And I'm sure there's clauses in there in terms of performance. So it's not like, oh, we're going to wire you that money right now. It doesn't work that way.
Yeah.
So,
but it is. I mean, it's a big bet, but their numbers were good. Their numbers are incredible. I mean, the way that they're able
Solid.
to, that they're going to be able to use this for ad placement and things like that.
They are great.
I mean, it's going to be pretty tremendous. So that's another one. Like if it comes down, I mean, man, what I would, tell people to do is go look at where things were in April versus where they are now. I mean, we're still nowhere close to that. I mean, we'll see what happens in the future, but I'm just not sure. I don't think the trade commotion will cause that kind of issue. But I do think that we will have kind of a lull here.
Yeah.
In the next couple of weeks. I mean,
think
we
it's
typically
It's
do.
good.
I mean, the seasonality of it kind of shows that over time. But we'll see. I mean, it's been kind of a wild year, and nothing's gone by the script. Mm-hmm. So, SoFi had good numbers too.
Yeah.
SoFi is up, and they're going to do another secondary offering basically of shares, which is a pretty big. So we'll see if that dials back a little bit. But I mean, good for them to raise some cash while things are looking pretty good. But I do like their kind of the future for the setup for them.
Yeah. Talking about raising cash, you want to talk about the IPO, Figma?
Yeah, we can talk about Figma.
They IPO'd this week.
Yes.
A lot of buzz around it.
Yes.
I bring it up because we talked about it either last week or the week before.
Yeah, I'm kind of mad. I mean, I have some people that I want to invest in it, but it goes up 250% on day one.
Yeah.
Which isn't a great look. It's also not a great look for Figma because they left so many shares on the table. So the investment bankers paid them $33 a share for it.
Yeah. Do you want to run through how that works real quick? Because you're probably the best. I mean, you taught me that 7 years ago.
Yeah. I mean, so the way that the companies go around and the investment bankers tell them what they think their shares are going to be worth, and they say, "Hey, we'll buy these shares for you at $33 a share." And so Figma sells all of their shares to, I don't know this, so I'm making this up on the fly, but I'm sure it's Goldman and Morgan Stanley and these guys.
Those are the two leaders.
Okay, so the market makers. And so Goldman and Morgan Stanley pay them $33 a share for their shares. And then they go around, they do a road show, and they dial up interest. And obviously there was a lot of interest for this. And so all of a sudden you have the bid-ask spread start to widen, and so they all of a sudden that's why they don't trade right when the market opens. They're trying to match buyers and sellers, and I'm sure Morgan Stanley and Goldman Sachs are going to their best customers. They're probably selling them some of those shares, and then all of a sudden it comes on the market at 90, and so they're sitting there selling. They have to make the market, so they're sitting there selling it to whoever, retail investors, at $90, $100. And, they've given it to some of their special clients. Most of the time, Morgan Stanley, Goldman Sachs, the way that you can get in on those IPOs is you got to be a big customer, but you also have to have probably participated in a lot of different IPOs over the years.
Yeah.
So it's normally like, we'll give you this one as a home run, but they did 25 other ones where they might not have made money.
Exactly.
But the problem is Figma, they could have sold those shares for a lot more. Now, I'm sure some of the executives and the employees are happy because now
they finally get a liquidity event.
Well, they get liquidity, but they still own shares personally. So now they own them personally. But the thing is their lockup is probably 6 months. Yeah. So I look at these, I'm always thinking 6 months in advance because, come Christmas time, the employees of Figma are going to get to sell.
Yeah.
And, they're going to probably, they thought they were going to get 33. Now it's 122. And so it just... But the problem is that there's going to be a lot of retail investors that kind of get into the hype, and that's what you see. You see this hype train coming, and then all of a sudden, they're going to get the carpet pulled out from under them.
Yeah, that's why I brought it up, because I think there's a lot of buzz. People are trying to get involved in it, and it's tough. You're trying to catch you're trying to catch a knife. I'm not saying it's a falling knife, but like it's kind of radioactive right now because, like I said, that's just how that works. Right?
Maybe even today on a bad day, it didn't go down. So it was actually up $6.50 today. And so, we'll see what happens. But all of a sudden it hits the Reddit, message boards and all that. And it's just completely detached from the company now.
Yeah.
And it kind of stinks when that happens because it's a company you're really interested in. But then it does that and you're like, okay, well, I got to wait a little bit. I got to wait for it to come down. Same thing with CoreWeave. CoreWeave rocketed up to 180, and now CoreWeave is back down to 115.
Usually how it works.
So it's kind of the same thing. I think CoreWeave has a pretty good future ahead of it too. But yeah, now CoreWeave's at 104. It was 180. And so you just, and their lockup, CoreWeave's lockup is in August and September. So I'm kind of waiting on that, waiting for those employees to start selling shares. And then when it looks pretty,
yeah,
I think they report, CoreWeave, reports on August 12th. So we'll see how that goes. But yeah, it just kind of, you want the IPO market to be good. And I'm a shareholder of Goldman Sachs and Morgan Stanley. and I know they're going to make a ton of money. And we've had this conversation over and over again.
Don't go searching for gold. Sell the shovels.
Yeah, I mean, and you look at Goldman and Morgan Stanley, and you look at the dividend.
They're the shovels. They're the shovels.
Man.
Don't go. The Figma's the gold. I never invest in IPOs. I'm not going to say I never will. I'm just saying that I have never done it. And part of the reason is because there's a lot of favoritism, especially with those shares being allocated in the beginning. VCs, right? I forget the name of the VCs, but usually there's one or two, right, that got in early.
Yeah.
And they end up 100xing their number or something crazy like that. There was like 5. There was a handful. The amount of money that was returned to VCs is crazy. And then those VCs have investors that over the last few years has said, we want a dividend. We want a dividend.
Right.
There's no IPOs. There's no acquisitions. I gave you money. You told me X, and I still haven't gotten anything.
Yeah.
This is the first time those VCs are going to be like, we know you waited. Here you go.
Yeah.
And are they going to wait a year to liquidate? No, they're probably liquidating right now.
The danger is that also with like young investors or retail investors or people who don't follow the market that much, they hear how great the IPO market is and how much money people made, but they don't realize that they really won't be in a position to be making that money.
Yeah.
I mean, they won't be in a position to have capitalized on that. But the other thing too about the IPO market is that so Figma was well talked about, all of these things. And
they sold it well.
You know, Goldman and Morgan Stanley are telling everybody, you got to have it, got to have it. Well, what happens when the circus leaves town? Because now that they've had an IPO, they get the shares out. Well, now they're going to go to the next one. And so that's why most IPOs actually underperform for the first, couple of years, because, the hype train that like got them on everybody's, board.
They had sales teams that went around the country.
Yeah.
And sold why you should be buying Figma.
Correct.
And when I say sales teams, I'm talking the best sellers in the United States
right.
that work at Goldman and all these places. And their main job, and they did it well, is to get you hyped up on this.
To get interest in it.
And then that just spreads. It's a crowd thing. But so for context, do you remember what the offer was that Adobe made for Figma?
Oh, gosh. $1 billion, right?
That was the buyout.
That was the buyout.
That was the cash they said.
That was the cash they gave them. That's the cash they gave them. Adobe gave them $1 billion because it didn't work out.
Which somebody should have thought. Hold on. We're going to give a startup. Well, not even a startup, but a strong startup, $1 billion in cash. What are they going to do with it? They're going to go knock on Goldman Sachs and Morgan Stanley.
Yeah. Well, we got this money to pay your fee. Was it $10 billion? What were they going to buy them for?
$20 billion.
$20 billion.
Adobe stock sank.
Yeah.
Everyone freaked out. They said they were overpaying, right? $20 billion. You know what the market cap for Figma is today?
I'm going to guess $55 billion.
$60 billion.
$60 billion. Okay.
You know what the market cap for Adobe is?
Man, that's
Adobe's been around for a while.
That's a good question. I'm $26 billion.
120 billion.
100 and what?
120.
Okay. Yeah, I didn't know
Figma's
that
half.
Yeah, half. Yeah. And you'd have to look at what are Adobe sells versus where Figma sells right now, and you will see how much, I think I forgot because they don't have earnings yet. Okay,
No.
so Figma's not profitable yet. So I forgot what they said it on TV today, but I think you're paying like something like 55 times next year's sales, not even earnings times their sales.
51.9.
What it's for sale? Yeah. Okay, so 51.9.
Yeah,
so 51.9 times next year's sales number. That's not profit like that, and this is where people get hurt. And then all of a sudden they say the stock market's rigged and they don't want to invest. I mean, this is exactly what happens. But this is also what happens when a market gets overhyped, and this is like not good signaling.
There was a whole lot of pent up stuff, though. I mean, you had bankers involved that haven't been paid in a while. Their money's on the line. Everybody's money is on the line for this to really juice up. And when you have enough people wanting a certain outcome, that's eventually what's going to happen. And we see it here.
Yeah, we do.
So the question is going to hold it. And part of the thing, the reason why IPOs can be real dicey is the founders that built this, they were really good at building it.
Yeah.
There's a difference between a founder that's building it and a founder that can go on earnings calls and speak it to the street.
Yeah, and so
they've never had to do that.
Yeah, they so that's the other thing. It's they IPO'd, so you're right. They've never done an earnings call, but it's one that if you're interested in, to like keep it on your watch list. I mean, you got to keep it on your and kind of follow what happens. But most of the time, like it makes me worried. I worry about it because there's some companies that are going to IPO hopefully in the near future, and I'm really interested in them. Anthropic, Anduril. I mean, there's some of these that are gonna, and I just don't want it to be like them popping 300% when they IPO. But I mean, we'll see.
Yeah, definitely interesting.
So the other topic you had was that your generation's tired of being feed to death.
Yeah. Yeah. The reason why I bring this up, I think I was starting to think about
what generation are you? Generation Z.
Yeah, I think it started like 1998, so I'm like right there.
Yeah.
But if you just think about the posture of investors from generation to generation and how it's changed, I think there was like this big ESG push, right? There was like all these different ways to how can we be a different investor than the previously. And I think a lot of that came from my generation. Like a lot of that push was from, we don't just want to give the old guy our money and he tells us,
guy.
Yeah. I wasn't going to say it, but the old ball guy our money, and then he has to, he does whatever, and then maybe we get a good 6% return or something. Hopefully we beat the market. I think that's changing. And also too, I think my generation's because it's been, if you look at our credit card statements or just our bank statements, it's death by paper cut, small fees, everything. Like not like, it went from, instead of paying $60 for your TV service, now you're going to have 8 different, you're going to have Netflix, you're going to have Amazon Prime, and now we're going to charge 15 for each. And now you're in the hole for way more than 60, right? Mm-hmm. So I think my generation's been conditioned to like start reading the fine print more.
Yeah.
What do you think?
I think I'm going to sound like an old person on this one.
Go for it.
Because like, I think your generation too, you also have, I just see it a different way. I see it as like your generation also has had the opportunity to invest so much younger than previous generations because the cost has come down so much with not paying commissions, the fee structure, being able to trade from your cell phone, all of these things. Like most investors, previous generations started investing in their 30s, and y'all could do it at 18, and so now there's a lot of danger in that because you could do a bunch of weird, you could do basically gambling. The line between investing and gambling has blurred, but it's also a generation that is used to like a lot of things being free. Instagram's free, Facebook's free, freemium, that freemium type deal. So it's like, okay, yeah, I'll use it, but you got to bring so much value in order to like get me to open my wallet.
Yeah.
Now, I will say, like, I mean, this isn't the same conversation, but the tipping culture is kind of ridiculous. I completely agree with you on that, on some things.
Yeah.
But I do think that, like, your generation has also had the opportunity to invest so much earlier because when you had commissions, like, you'd have to call somebody somewhere. Like, you literally couldn't do it on your own.
Yeah, that's insane.
Like, you could not do it on your own. So, like, my generation was the first time where, like, Scottrade came around, TD Ameritrade, Schwab, where you could actually go online and invest without actually having to go through a gatekeeper of like Merrill Lynch or somebody where you had to have a broker in order to make the trade. Like you literally could not do it on your own.
Yeah. I don't know how I was thinking about how oftentimes there is a narrative that's being fed and my generation is like, what is the angle? Where's the angle here? There's always an angle.
Like how do people get paid? Or
just like, hey, Figma, all this stuff, CNBC, they're talking it up. I think my generation's like kind of to a point where it's like, okay, what's the angle here? Like what you know what I mean?
Yeah, I think that's probably because you're just raised in like information overload.
That and how do you know? Like, how do you know what's real? All this stuff, so it's a constant like rise and fall. So I think that's part of it.
Okay, but I think part of that is because everybody can trade. Like, I think we're having I think we're having more volatility, wider volatility, because so many people can trade on their phones, and the cost of that, the price we're paying for that is wider swings.
Yeah.
Is because you have people who get emotional, they trade more often, they're in, they're out. Like, again, like, you heard me say this before, but like 1996, you look at somebody's portfolio, they owned every position for an average of 6 years.
Yeah.
And today it's less than 6 months. So we don't have a generation of investors. We're creating a generation of traders. And the companies don't tell you anything about it, Schwab and all these guys, because they need you to trade because they're not charging commissions. So they need those micro fees that they're charging in order to make money.
How many times have you sat down with somebody, prospective client, not a client yet, and they're like, hey, I think I'm in a good spot. I get somebody who says he's doing good. I'm just kind of like looking what's over the fence. And you look at the portfolio and you see these positions and you start looking them up and you're like, okay, that's 2% fee on that mutual fund.
Yeah.
That's 1.5% on that mutual fund. And then what does he charge you? Oh, he charges you 1.5%. Okay. So and then you start going through it and then you get to the one that's like maybe 4%. Expense fee on a mutual fund, and then you start showing them, and they're like, "Oh my gosh,
that happens.
A quarter of my money, I'm getting charged 3.5%."
Mm-hmm.
And it's kind of like that moment where you're like, "Okay, there's the angle." I'm so tired of people trying to like fee me to death,
right?
That I'm just like, whatever it is that we need to do, let's get out.
Yeah.
How often do you see that?
Every time or every other time? I mean, pretty much. I mean, yeah.
You're telling me that you look at that and you don't think this is a problem? This is a problem?
Yeah, I mean, that's how...
Which is exactly why we do what we do.
I mean, it's the reason I have such a great... I mean, it's why I have, such a great... I mean, there's a ton of opportunity, but it's not just... But that's not just in investing. I mean, think about how many industries, like how much money is made off the ignorance of others.
And I think my generation is starting to notice that.
Yeah.
And doesn't want, and then starts thinking for themselves. Like, instead of me just saying, okay, yeah, this guy's a nice guy who was referred by my buddy John or whatever.
Right.
Let me trust but verify. Who said that?
Ronald Reagan.
Yeah.
Did you know that before you asked?
I did.
Okay. Yeah. I mean, well, it's the same, but it's the same. Like when I was
younger.
You're
trying to call me young or something? Like I didn't know.
It's just, I wasn't expecting a Ronald Reagan quote in the middle of this. But it's the same when I was your age. Like I learned about cars because I wanted to make sure I didn't get ripped off when I got my car worked on. I mean, it's just like, I think it's also like, I think you are coming to the age of where like you're starting to absorb all this stuff where you become an adult and you're like, man, I got to protect myself because there's no matter which behind door number, whatever, there's always going to be somebody who's going to, maybe try to swindle you a little bit. I mean, you have to protect yourself. It's not that you have to do it yourself. You just have to be an informed consumer on a lot of things and try to make sure that you're making the best decision possible.
Yep. I agree.
So, there's just tons of ways that can happen. So, I don't know. I mean, and you don't have to have every service. I'm sure you probably Netflix, you probably watch something cancel, like.
How would you say such a thing,
Ryan? I don't know. You watch Netflix, cancel it, join, another one can't,
I at least make it to the 7th day before I cancel. You get a whole week for free.
We call those gamers.
Oh,
so I'm sure
there's
but you probably know some people who do that.
Yeah, I saw one that I thought was so funny. It was like, my friend doesn't know that I still have his Netflix sign on,
right.
And he changed the icon to
guest
or the other ad profile.
That's a good one. Ad profile. That's what you should do.
Is the name of it?
Yeah, change it to ad profile. That's
my
great.
Friend.
Yeah, your friend. It's always the friend. So, I think we're pretty good here. I mean, we have, markets had a good comeback. When you look at it on a year to date, it's not great, but I mean, we've had 2+ years of 20% returns. We're just digesting some of this. We'll see what happens this week. I mean, we still have a lot of earnings coming out, so we have to see and see how this goes. But it'll kind of determine how August, September go. But I do think we're due for a little bit of a pause, if you will.
Just let's go even for a bit.
Yeah, even for a bit, not the up down. So we'll see. Got anything else for this week?
I think that's it.
Okay. All right. Well, as always, don't mistake activity for achievement, and we will see you next time. Thanks, everybody. This podcast contains general information that may not be suitable for everyone. The information contained here should not be construed as personalized investment advice. There is no guarantee that the views and opinions expressed in this podcast will come to pass. Investing in the stock market involves gains and losses and may not be suitable for all investors. Information presented here is subject to change without notice and should not be considered as a solicitation to buy or sell any security. Right R Equities does not offer legal or tax advice. Please consult the appropriate professional regarding your individual circumstances. Past performance is no guarantee of future results.